On Business Incorporated today, Ghana eyes economic rebound as it opens land and sea borders. Egypt becomes export hub for grains, food to Africa. Plus, Sudan's central bank warns on cryptocurrency use as economy tanks. Hello and welcome to the program. I'm Will Ibong. We kick off as always with market numbers from major equities in Africa. Trading was mostly in the red at intraday. Nigeria's main index was down 0.39%. Meanwhile, South Africa's performance index jumped by 0.15%. In other markets, Egypt's EGX30 tumbled 1.95%. Meanwhile, the Nairobi Stock Exchange closed Friday's trading session in positive territory, up 0.76%. Over to the Middle East, where trading activity is mostly positive. At intraday, the Abu Dhabi index was up by 0.46%, while Dubai's main index was the biggest mover, up by 2%. Still within the region, Saudi Arabia and the Qatari exchanges traded in opposite directions. Saudi Arabia's index inched up by 0.11%, while the Qatari index dipped 0.14%. Now over to Europe, where Russia and Ukraine peace talks is the focus this week, and Ukrainian president has reiterated that his country is prepared to discuss adopting a neutral status. Let's get more updates from Rob Watts right there in Berlin. Now, Rob, Ukraine is trying to help speed up the EU's exit from Russian oil and gas. What's the Ukrainian government's plan?
Well, the Ukrainian energy minister has made what might seem like quite a surprising suggestion. Herman Halushenko has suggested that European countries could make use of Ukraine's large storage facilities to build up strategic reserves of natural gas. He pointed out in a post on Facebook, actually, that Ukraine has the largest underground gas storage facilities on the continent, and the likes of the EU could take advantage of that as they look to end their reliance on gas delivered from Russia. Now, clearly, right now, that doesn't seem like it would be the most secure arrangement possible in terms of energy security, given the presence of Russian troops in Ukraine. But it's perhaps an idea for the future. More immediately, though, Ukrainian President Volodymyr Zelensky has been trying to persuade oil and gas producers around the world to increase their output in order to help the EU shift away from Russian supplies. Over the weekend, he addressed an economic forum in the Qatari capital, Doha. Qatar is seen as key to Europe securing more gas, specifically liquefied natural gas. And in his speech, Zelensky said higher oil and gas output across the board would mean that no country could use energy as a weapon to blackmail the world.
Though we'll still see how that turns out. Now, German Chancellor Olaf Scholz is preparing German households for tougher times ahead. What's he been saying?
Well, he was talking about that very push to end the EU's and in particular Germany's reliance on fossil fuels from Russia. Remember, Germany gets most of its natural gas from the Russians. And during an interview with public broadcaster ARD, Chancellor Scholz said that energy independence would come at a price, and that price for Germans would be higher energy bills. Higher bills, it's already something being experienced across the board in Europe, where natural gas prices are 4 times what they were just a year ago. Over the weekend, we also heard from the president of the European Central Bank, President Christine Lagarde. She again played down the threat of so-called stagflation to the Eurozone. So that's a period of low economic growth and high inflation at the same time. But she said that the data doesn't point to a material risk of that. And despite annual inflation of almost 6% across the countries that use the euro, driven by those rising energy costs, Lagarde still expects it to be down around the ECB's target of 2% inflation as soon as 2024. However, Lagarde does warn that economic growth in the region could be as low as 2.3% this year. Now, that is much lower than a previous forecast of 4%.
So it's the start of the week. How is the markets looking for Europe, seeing what's happening in the region?
Well, one of the big changes on markets is resumption of normal trading of Russian shares on the Moscow Stock Exchange. You may remember that the stock exchange reopened last Thursday, having been closed shortly after the invasion of Ukraine began, so almost a month ago. However, only around 2/3 of the ruble-denominated stocks were open for trading last week, but Monday is seeing trading back to normal, albeit for only half a day, and there does remain some restrictions on overseas investors, for example, preventing them from selling on the exchange. It'll be interesting to see how Russian shares end Monday, having surged last Thursday but slumped on Friday. Also, something to watch out for on European markets is the impact of a new coronavirus lockdown in Chinese financial hub Shanghai. The vast city's businesses have all been ordered to suspend manufacturing or implement remote working. We saw that take a toll on Asian markets at the start of the week on Monday. Tokyo's Nikkei, for example, ended its 9-day winning streak on the uncertainty over what impact the lockdown is going to have. We also saw oil prices shed $3 per barrel. And another factor this week is going to be the next round of peace talks between Russia and Ukraine taking place in Turkey. Now, last time round, we saw share prices on European markets ebb and flow as optimism of a diplomatic solution to the war rose and then died away. We can perhaps expect to see the same as those talks resume this week.
Okay, Rob, we'll be watching the markets and see how it closes today. Thanks so much for that insight. Now, amid the peace talks expected between Russia and Ukraine this week, the UK government is not relenting in its sanctions and still stomping hard on Russia. Juliana joins us now to give us more details on that. Hello, Juliana. How are you doing today?
Good afternoon, Will. Nice to see you.
Good afternoon. Now, the UK government has asked public sector bodies to sever commercial ties with Russian firms. Tell us more about that.
Well, yes, we know that Britain, alongside its allies, have been doing everything they can to try and squeeze the grip on Vladimir Putin's Russia because of its invasion with Ukraine. And today, Stephen Barclay, who is the Chief of Staff in Downing Street, he's released a communique on the gov.uk website, piling some pressure on the UK's private sector to cease trading with Russia. That's the plan. And this comes, of course, last week at the start of the extraordinary NATO meeting where Liz Truss, the Foreign Secretary, announced a further 65 sanctions on Russian businesses, Russian elites living in the UK, as well as Russian army personnel working personally for Vladimir Putin. That takes the toll up to over 1,000 individuals or businesses trading within the UK that have been sanctioned. Of course, the government can only go so far. We know that private companies are still conducting business with Russia, in fact, including one that's linked to Chancellor Rishi Sunak's wife, which is doing a huge media storm in the UK here in the moment. So they are putting in the pressure. They are asking people to step back, particularly in the areas of energy. We know that Volodymyr Zelensky, the Ukrainian president, has been keen to point out to all allies across the world that it's fueling the assistance of Russian energy exports is funding the war, and they want to put a stop to that.
Juliana, I'm sure the markets are not looking too good to that announcement. But how are they doing currently? How are the markets reacting to this?
Well, despite, as you were just discussing with Rob in Berlin, this new lockdown in Shanghai, that's completely taken people by surprise here. That's pushed oil prices down as they presume that demand may not be needed. The FTSE is actually in pretty decent position at intraday. It started the week trading on the green. The all-share is up by 0.51%. The FTSE 100 is also up by 0.57%. And the FTSE 250, the domestic market, that's up by 0.56%. In the currencies market, the British pound is currently trading down on the US dollar by 0.29%, also trading down on the euro by 0.33%, but trading up on the Japanese yen by 1.19%.
Good news for the market. So we're coming home to Nigeria. There's some news going around that the Nigeria High Commission in UK was wrong to suspend the order on e-passport issuance. Juliana, what do you know about that?
Well, yes, I've just been speaking to some sources, actually. A spokesperson for the Nigerian High Commission in the UK has actually confirmed that from tomorrow, the enhanced e-passport will resume coming out of the mission. And this is following a release from the mission on Friday, which said that it would have to cease these passport issuances for a technicality. Now, this is all about the enhanced e-passport. It has nothing to do with production and issuance, and we know that in the past lots of issues that have been coming out of the Nigeria High Commission in the UK has been about the production and getting a hand on the booklets. It's not to do with that. This appears to be about a technicality with the biometric issuance. And now we know that a lot of people travel from across the United Kingdom to come into London to get their passports, and because of the very, very long waiting time, this was causing a huge issue with staff. I have been told that at least 3 or 4 staff members were physically assaulted by, unfortunately, some impatient Nigerians. And after a huge discussion with Nigerian community members here in the UK, most notably the Central Association of Nigerians, as well as the Nigerian in Diaspora organisation, it was felt that the best thing to do was to cease the issuance to try and resolve the issue. Now, there have, of course, been some high level discourse around this, and which is why the Nigeria High Commission has decided that they will resume the issuance from tomorrow. But bearing in mind that issuance wasn't the issue, it was about the time it was taking for people to get their appointments for biometric. Of course, if you're only in Britain for a short time, you need to sort out your passport. You need to do it within 2 weeks, and you're given a date for 6 weeks. That's a huge issue, and I think it was the technical issue with the enhanced e-passport that had caused some of the disruption. But in terms of patience, it does appear as if Nigerians in the UK have become a lot patient, more patient with the Nigeria High Commission in the UK. So there doesn't seem to be too much noise around it. But I have been assured that from tomorrow, the mission will be running as per usual. But of course, these are delays, are something that must be sorted out sooner rather than later.
Julia, I'm glad that that has been resolved, and I hope that we have smooth, sailing now from tomorrow, like as you mentioned. Thank you, Juliana, for coming on the program.
Thanks, Will.
Now to Asia, where shares in Chinese tech firms mostly rose in mixed Asia-Pacific trading on Monday, with oil prices falling more than 3%. The Hang Seng Index in Hong Kong advanced 1.31% to close. Now, the broader Asia-Pacific markets struggled for direction on Monday. Mainland China's Shanghai Composite gained 0.07% to close, while the Shenzhen Component shed 1.01%. In Japan, the Nikkei 225 slipped 0.73% to close, while the Topix index ticked 0.41% lower. South Korea's Kospi was little changed on the day. Stocks futures were lower in early trade on Monday as investors look ahead to a series of key economic reports and continue to keep a close eye on the Federal Reserve's planned interest rate hikes. Futures tied to the Dow Jones Industrial Average moved up by 0.09%. S&P 500 futures and Nasdaq 100 futures rose 0.15% and 0.12% respectively. Now, the Dow Jones and S&P rose in the previous session to close out their second consecutive winning week. The Dow gained 153 points. The S&P 500 advanced 0.5% and has more than erased its losses since Russia invaded Ukraine in late February. Meanwhile, the Nasdaq Composite dipped 0.2% but still finished the week in the green. The moves come as investors continue to monitor developments in Russia's war on Ukraine and expectations about the Fed's plans to hike interest rates. Now, before we go on, we'll take a quick break, and when we come back, conversations on cross-border trades in Africa. Do stay on. Now, Ghana says it expects an economic rebound as it moves to open land and sea borders to mark the end of COVID-19 restrictions imposed at the beginning of the pandemic. According to President Nana Akufo-Addo, fully vaccinated travelers will be allowed entry through land and sea borders without a negative PCR test result, while citizens and foreign residents in Ghana who aren't fully vaccinated will be required to produce a negative 48-hour PCR test result and will be offered vaccination on arrival. He adds that the policies will help to boost economic growth and create jobs for the youth. Ghana's economy recovered from a pandemic-induced recession in the third quarter of 2020. Its overall financial health is yet to bounce back due to an increase in its budget deficit and debt levels. Meanwhile, the economy is forecast to grow 5.8% this year from a projected 5.1% for 2021. Egypt's Ministry of Agriculture says Kazakhstan is looking to establish a logistics center at the Egyptian Red Sea port that will help it ship its grains and other foodstuffs to Africa. The Central Asian country is one of the approved sources for wheat for Egypt, the world's biggest importer of the grain. In addition to the project at the port described as a logistical zone for free trade, the two countries are also discussing further agricultural cooperation and investment. Sudan's central bank has urged citizens not to use cryptocurrencies, warning of the risk of financial crime, electronic piracy, and market volatility. The financial regulator says digital currencies could not be considered as legal tender because they are not they are not issued by authorized or accredited bodies. Meanwhile, packing money in cryptocurrencies is a small but growing trend in Sudan. The North African nation's economy is under increasing strain after an October military coup derailed its path to democracy and led to the suspension of billions of dollars in overseas aid. The Sudanese Now, Kenya's food vendors are feeling the bite of the soaring flour and gas prices as the conflict between the world's two big grain and energy exporters enters a fifth week. The prices of flour and liquefied gas, the two imported essentials for Kenya's food vendors like Peter Kobe, have been skyrocketing over the past month.
Comes from a mountainous area in western Kenya. He arrived in the capital, Nairobi, a year ago to work as a chef at a breakfast eatery. He makes chapati, a wheat-based leavened flatbread and fried triangle-shaped pastry, which is popular breakfast food in Kenya. For Kobe and the likes, they have been forced to swallow the soaring cost of ingredients such as flour and cooking oil in recent weeks.
Previously, we were buying the packet 140. For now, it is 180. The salad, we used to buy around 180 per liter, but for now, 300 shillings, it's really tough for us.
Besides the ingredients, the price of liquefied gas has almost doubled, forcing Kobe to seek for an alternative fuel option. With raging operating costs, Kobe is suffering substantial income loss, making it more difficult to support his family. Having lost his father when he was in grade 2 at the primary school, Kobe is now the breadwinner to his mother and 3 sisters who are back in their hometown.
I am the one whom they are depending on. Previously, I was getting around 1,000 shillings. For now, I do half of that.
At the beginning of March, the price of 13 kilograms of liquefied gas, which can last 2 weeks, has risen from 2,700 shillings to 3,340, up around 20%.
The staples we have in Kenya are wheat. Wheat is used to make bread, is to make chapati, is to make all these things. 80% of wheat in Kenya is imported from many countries, and one of the biggest suppliers is Russia.
As a country that heavily depends on imported food, the escalating conflict between Russia and Ukraine, 2 major food exporters, has posed a severe challenge to Kenya.
Now, meanwhile, the Africa Development Bank says it plans to raise a $1 billion emergency food production initiative to avoid a food crisis on the continent triggered by Russia's invasion of Ukraine. According to the president of the AFDB, Mr. Akinwumi Adesina, the emergency food production plan will focus on rapidly boosting commodities output, such as wheat, maize, rice, and soybean.
To help implement the plan, which will produce food staples worth $12 billion.
When COVID struck, we were not ready. But this time, we are fully ready, and we will avert a food crisis, and we will avert also the impact on inflation. But we do need the money to be able to very quickly intervene and get it done. The plan is to be able to produce roughly 30 million metric tons of food, and to get technologies into the hands of 20 million farmers. So you're looking at big scale with smallholder farmers.
Now, oil prices fell more than $3 early on Monday as fears over weaker fuel demand in China grew after its financial hub of Shanghai launched a planned two-stage lockdown on Monday to contain a surge in COVID-19 infections. Brent crude futures slid as low as $116 a barrel, while U.S. West Texas Intermediate crude futures hit a low of $109 a barrel. Both benchmark contracts rose 1.4% on Friday, notching their first weekly gains in 3 weeks, with Brent surging more than 11.5% and WTI climbing 8.8%. Now, OPEC Plus has so far resisted calls from major consuming nations to step up an output boost. The group has been raising output by 400,000 barrels per day each month since August to unwind cuts made when the COVID-19 pandemic hit demand. Meanwhile, global stockpiles are at their lowest since 2014. Gold prices fell early on Monday as the dollar index gained and U.S. Treasury yields held firm near a multi-month high, with investor focus on potential Russia-Ukraine peace talks this week, further dimming bullion's safe haven appeal. Spot gold was down 0.7%, while U.S. gold futures were down 0.5%. Similarly, spot silver fell 1.5%, platinum shed 0.7%, while palladium added 1%. Sub-Saharan Africa has the world's largest free trade area with 1.2 billion person market. Many countries on the continent are seeking to make trade in goods and services cheaper, quicker, and more efficient. However, complex, time-consuming, and inefficient import and export procedures constitute a major barrier to trade and hamper development, especially for low and middle-income countries. Joining me to discuss this is Mr. Salami Alashuadua, President of West African Association for Cross-Border Trade. Hello, Mr. Alashuadua. It's good to have you on the program.
Hello, good morning. Good afternoon.
Good afternoon,
How are
sir.
you?
Very well, sir. How are you doing today?
We are trying to survive. How are you, madam?
Great, sir. Now, can you speak on specific challenges hindering cross-border trade in Africa, especially Sub-Saharan Africa?
First of all, I have to thank you for giving me the opportunity. Let me make a few presentations first. When we talk about cross-border trade, we have to talk about trade corridors. In the southwest, we have about 3 states. That is Lagos State, Ogun State, and Oyo State. In the north central, we have Kwara and Niger State. In the northwest, we have Kebbi, we have Sokoto, we have Katsina, we have Jigawa. In the northeast, we have Yobe, Borno, Adamawa, Taraba. On the south, we have Akwa Ibom and Cross River State.
So
those are the states that share border with Nigerian neighboring country where we are having cross-border trade. When we are talking about the challenges,
okay, sir.
The challenges, first of all, we can talk about policy. We don't have stable policy in West Africa. in general in Africa, sometimes the middle of the road, they will say this one is banned, this one is leaked. So those policies are killing our cross-border trade. We have lack of trailer parks, lack of custom bonded warehouse, lack of electricity. Those are the problems we are facing in the area of challenges. We have what we call custom connectivity. The custom connectivity between the command and the station. Most of our borders, we don't have custom connectivity from the command to the station. Those are the problems we're having. Like I was saying, it, the ECOWAS protocol says that when you have, you can, let us say you have 200 tons of cargo, you generate 200 tons of cargo, you need to have a trailer park. That is what ECOWAS policy says. Is it like that in West Africa? No.
Thank you, Mr.
These
Salami.
are the challenges we are facing along our corridors.
Okay, sir.
Again, no custom, proper custom connectivity between the commands. Only Lagos command.
Thank you, Mr. Salami. Mr. Salami Alashodo, I think we... Mr. Alasho Adua, thank you so much for sharing your thoughts on the program. We can't take any more insights on that for today, possibly some other time. And that's the program for today. Thanks for watching. I'm Will Ibang. Bye for now.